Hi everybody, Alex Abloya from Expert Forex, and in today's video we're going to be talking about the continuous question of what are sideways currencies, what are trending currencies, what are volatile currencies, which currencies are best to trade breakouts and which currencies are best to trade bounces. So all of those basic and major Forex trading problems we're going to be looking at in this video. So on your screen you can see a very basic tool that will answer all of these questions that I've just mentioned. What does the tool consist of? Firstly, it consists of all the daily ATR readings. Now the ATR is the average to range of a currency. That basically means how many pips does this currency move in a day on average. Then the next column is the weekly ATR. So in other words, how many pips does this currency move over a week? And then we have a monthly ATR, which says how many pips does this currency move on average over a month. So that's not rocket science yet. But then when you start comparing these readings with each other, then you start seeing a different picture. So for instance, if you compare the daily reading with the weekly reading, and I'll just sort this column. So I've sorted it from low to high. So what it's saying here is that the New Zealand USD on average travels 63 pips a day. On a weekly basis, only 130. So the range that this currency travels on a daily basis is quite high compared to the range that it travels on a weekly basis. In other words, it doesn't travel much. It only travels twice as much. So twice the daily range is almost the weekly range. If we now look at the one that is a little bit more volatile, like down here at the moment, the yen, you can see that the average to range of the yen is a lot smaller than the weekly one. So it's this time there's 3 times the daily range goes into the weekly range. Now the biggest you can get is 5, because if you are trending straight up for a long period, this ratio will be 5. So this ratio now is 3, which means, but it's still the highest of all currencies. And this ratio is 2. It is the lowest of all currencies. It says that this currency is less volatile than that currency in terms of trending. So this one is a less trending currency and that one is a more trending currency. So then if we take it one step further and we compare the daily and the monthly, and I'll just do that, I'll sort on that, the differences become a lot bigger. So again, we look at the pound Oz. It has a daily range, an average daily range of 190. The monthly range, average range that it travels is just under 700. That means that the daily range is only covered 3.6 times in a month. That's very small if you think about it in terms of the volatility of the currency. That means this is a more sideways currency. If we look at the CAD yen, for instance, and you say the daily range is 65, but the monthly range is 400. So in other words, there are 6.3 daily ranges in the monthly range. So that is a much more trendy type of currency, and certainly not a sideways currencies as we discussed earlier. So how does that all matter? So on the whole, what you do is you trade breakouts with trendy type of currencies, and you trade bounce trades with the lower volatility currencies. So this is a way of identifying sideways currencies and ones that are more likely to trend. So this is a very simple tool, and also what it can do is you can actually see the volatility of currencies. For instance, that's the least volatile currency and that's the most volatile currency. And you can sort these columns on a continuous basis that way. So if you want to see on a weekly basis which is the lowest volatility, you can do that too, and obviously on a monthly basis too. And as you can see, it's still under development. Although we're using it as traders, it hasn't been made available to other traders. If you're interested in this tool, let me know in the comments of this video. Based on the interest level that we experience, we might make this available to our traders. What is also quite critical that I didn't mention before is the importance of stops and target sizes. This table tells you which currencies you can have big stops and big targets, and which currencies you need to go for smaller stops and smaller targets. Because it's really pointless going for a 300 pip target on the USD franc if on a monthly basis the average two range is only 280. But it's very easy to go for a 300 pip target if you know that the average range, for instance, for the pound yen is 600. So you can determine stop sizes and target sizes based on the volatility of the currency, as well as the currency's inclination to trend or to go sideways. So I hope you found this interesting and an alternative approach to telling currency volatility, which currencies are best traded in sideways markets, which are the best breakout currencies, and which are the best trending currencies. There are many approaches to use, but this is an alternative perspective. From me, Alex Deploy, cheerio.